Ticker symbol JEPI, or the JP Morgan Equity Premium Income ETF known as JEPI, is one of the most popular and one of the most talked about cover call style income-oriented ETFs across the entire market. Now this is because ETFs like JEPI give you exposure to the cover call strategy, which can potentially earn investors a ton of income as far as distributions, dividends, compared to other more common ETFs across the markets. Now I personally am also a big fan of JEPI, and I currently hold over 1,000 shares as of right now across my portfolio. But in this video specifically, we're going to dig a little bit deeper into the JP Morgan Equity Premium Income ETF, talk about some of the good, some of the bad, and talk about maybe the most important aspect of JEPI, talk about the dividends and capital gains, the distributions that this ETF has paid so far. Now I promise you, if you're interested in income-oriented investing and either hold JEPI or have ever thought about it, you're going to want to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So backing up for a second, for those of you that aren't all that familiar with JEPI ETF, I'm sure at this point you've at least heard of it, especially if you consider yourself a more dividend income focused investor. This ETF is pretty simple. It says seeking consistent premium income with lower volatility. JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity exposure with less volatility. This is with portfolio managers of over 60 years of combined experience investing in equities and equity derivatives. The portfolio, defensive equity portfolio, employs a time-tested, bottom-up fundamental research process with stock selection based on our proprietary risk-adjusted stock rankings. Disciplined option overlay implements written out of the money S&P 500 index call options that seek to generate distributable monthly income. So like we sort of talked about during the intro, because JEPI, for example, utilizes the cover call strategy by specifically selling out of the money S&P 500 index call options, this is going to allow the portfolio, especially during times of volatility, to earn a ton of premium, which then of course is paid in the form of dividends to investors. Now, some more important facts about JEPI: the expense ratio you're going to have to pay, of course, to play is 0.35%, which is a relatively cheap expense ratio, but keep in mind, compared to other cover call, more income style ETFs, JEPI is probably on the lesser end of management intensity, and this is simply because of their cover call strategy. It's not all that labor intensive, so you aren't going to pay an arm and a leg, but keep that in mind. Now that we have a basic idea of JEPI and how this ETF actually works, it buys a basket of holdings and utilizes the cover call strategy. Pretty straightforward, pretty simple. Before we look into the dividends and see what sort of cash flow JEPI has paid historically to investors, looking at this ETF's performance since inception. Now keep in mind, JEPI started trading back in 2020, so it's only been around for around 4 or 5 years now. Not all that much data to go off of, but still we have some of a track record to say the least. Now in the max time frame, JEPI is currently up around 12.41%. So that's more or less a 3% return as far as price goes over the last 4 or so years. Not necessarily all that great, but also not necessarily all that bad. I say that because a lot of these cover call style ETFs, because of the way the cover call overlay really works systematically, the upside is going to be sort of capped, but the downside is only going to be protected so far. So during times of market volatility, although JEPI's cover call strategy, for example, is going to help sort of lessen the blow, it's not necessarily going to save the underlying if the market declines rapidly. But on the other hand, when the market turns bullish, although JEPI is going to move up in price most likely, because of that cover call overlay, there's only going to be so much upside potential, which is again sort of one of the downsides of trading this cover call strategy, which I personally implement throughout my portfolio. And of course, like I said, I also own a ton of JEPI at that. But of course, the more brighter side of this cover call strategy, if the market, for example, trades more or less sideways over a sustained amount of time, the cover call overlay is going to generate a ton of income for investors, even if the market returns aren't really going to be all that great as far as price return goes. So even though JEPI has only went up around 12.39% in the max time frame, maybe some investors are going to look at that as a negative. I think for a more income focused investor that wants some exposure to some more income potential, 12% over 3 years is not necessarily horrible. Now looking a little bit deeper into JEPI, back in 2021, JEPI was trading well over $62, almost $63 per share, so we still are off of the all-time high when it comes to that. But I think over the next few years, if the market somehow cooperates and keeps trading up and to the right even at a slow pace, JEPI could once again see above the 60s, at least I hope so. Now, maybe most importantly, especially in the context of this video, looking at JEPI's dividends and cash flow that have been paid to investors historically. Now, this is going to expose a lot when it comes to this ETF because, again, a lot of you guys, including myself, we purchase shares of JEPI in the tens and the hundreds and the thousands, hoping to get paid massive amounts of cash flow every single month because at one point, at least, this ETF was more or less offering that. Now, the dividends, the payouts for JEPI are sort of all over the place, and this is due to the cover call overlay once again. Because JEPI sells out of the money calls and the S&P 500, those calls are going to have a different price tag ongoing unknowingly, depending on things like the option market at that time frame, depending on things like the volatility index and how much volatility is priced into the markets. The option prices are going to be sort of all over the place, and this is depending once again on what's going on in the market during that time frame. So month over month, you can't really assume that the same situation is going to be happening, which is exactly what we see on JEPI's payouts historically. Now, some of the smaller payouts have been anywhere from around 30 cents on a monthly basis, and some of the biggest payouts have been upwards of 61 cents, which is quite a spread there. I mean, if you're trying to live off JEPI for retirement, let's say, for example, let's say you bought a ton of JEPI because you're hoping that this ETF is going to basically farm your portfolio enough dividend income to pay for your bills, etc. If you're getting paid 30 cents per share versus 61 cents per share, that is going to make a massive, massive difference and could honestly make or break someone's situation. Not to mention for investors out there, some of you guys probably watching this video that have hundreds if not thousands or tens of thousands of shares. That's going to make a big difference in your portfolio overall as far as how much of a total return you're going to see on a yearly basis. Now, because of course JEPI's dividend is going to be based off of things like volatility and other things, we can't really assume that during every time in the market we're going to get paid as much as we might have during other times, and that's of course something to keep in mind. Which is why for me personally, I would never utilize an ETF like this one specifically to try to live off of the dividend payouts because again, they're just too volatile and we don't necessarily know how much it's going to be moving forward. Now, another sort of elephant in the room is the fact that JEPI's payouts have for the most part just been significantly lower over the last say 6 or 7 months. And this is compared to back in 2022. Now, I remember back in the day, and this is because I've been holding on to my JEPI shares for several years now, I remember getting paid upwards of 50 cents plus every single month for a while it felt like, which was a massive, massive amount of payouts, especially because I've held well over 1,000 shares for a while. But as of recently, the payouts have been smaller and smaller, 29 cents, we have 33 cents, 36 cents, anywhere around the low 30 cents range, which is of course going to hurt, especially if you have multiple hundreds of shares. But even though the payouts during some time frames have been smaller, it still hasn't really changed my mind about this ETF. I still am bullish on the overall strategy, and I think the management has done a rather good job maintaining a nice positive total return year after year since inception. But like I mentioned, I would never utilize this ETF and really bank on this ETF to pay for my bills, and that's just because the payouts are just too much all over the place. But even with the payouts being sort of all over the place, it doesn't change the fact that JEPI, at least since inception, has been a relatively great investment over the long term. Over the last 4.22 years with a $10,000 investment into JEPI, and of course, if you were to have reinvested the dividends along the way, an investor would have had a total return of 62.98% or around 12.2% per year. Now, over that same time frame, even if dividends weren't reinvested along the way, an investor still would have had a total return of 54.26% and around 10.8% year after year. So that kind of brings me back to my point, regardless if JEPI hasn't performed necessarily insane as far as price return goes, and if some of the dividends have been smaller over time, the total return either way over time since inception is still there with around an average 10%, 11% total return, at least annually so far. Now that being said, as of right now, I'm personally not buying any more shares of JEPI. I think there's other better covered call style ETFs across the market right now that I'm personally investing heavily into. But for those investors out there looking to seek consistent income, even if it might be a little bit smaller in the future and with less volatility, JEPI could still be a good option for you. But now most importantly, I want to hear from you guys down below across your portfolios as of right now. If you own shares of JEPI, how many shares do you currently hold? Let us know down below in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more feature content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.